Hi, this is James Shrug with Westpac London's end of day report for Tuesday, the 14th of February. The ratings actions by Moodys overnight, downgrading a range of European sovereigns, and in some cases kind of leapfrogging the recent downgrades by S&P, certainly injected a negative tone into market trading early in the European session. But we actually saw markets move into positive territory a little bit later on, partly perhaps the result of, I think it was Spanish and Italian debt auctions, which actually went off quite well, better than expected, and the lowest financing rates for those governments seen for some time. Effectively shrugging off those Moodys concerns. However, later in the session we had some softer US data related to retail sales, I'll run through it in a minute, which saw that negative sentiment reassert itself. So on the data today, the main bits of information were in the US, a retail sales rise of just 0.4% in January. What was a surprise there was that auto sales were down, although they were up 5% in unit terms. In other words, it looks like Americans are either buying cheaper cars or there's a lot of discounting going on. That weighed down the retail report. Core retailing rose 0.6%, but the previous month, December, was revised from flat to -0.2%, and the annualised pace over the last 3 months, the latest 3 months for retail, core retail, is just over 3%, which is the lowest it's been since September 2010. And that, of course, is when we had those double-dip recession concerns of around 18 months ago. So the retail story overall was certainly a disappointment to markets. And other bits and pieces of information, in Europe we saw industrial production fall 1.1% in December. The last 4 months of 2011 didn't post a rise, either flat or negative. And the annual pace there at -2%, well, that's the pace it was running well into the recession of 2008. So that's another indication that Europe's probably in recession right now. In contrast, the German ZEW Analysts Sentiment Survey posted another huge gain in February on top of its roaring January rise. So it seems the German analysts, the 300 or so that are surveyed by ZEW, really are buying into this idea that the ECB is getting on top of things with the LTRO that it did in December, and looking forward to the one at the end of this month. So although the ratings agencies sound worried, although there's been certainly a lot of turmoil in Greece related to it getting its next round of bailout funds. In fact, on that, German Finance Minister Schäuble today said that the market is much better prepared now than it was 2 years ago for a Greek default, kind of hinting that maybe that is still an option not too far down the track. Despite all of that, those German analysts were really upbeat. In fact, in the 2 months, that index has recovered half of what it dropped from its recent peak in late 2009. So it took more than 2 years to fall, and in 2 months it's recovered half of that in January and February of this year. In the UK we saw inflation falling, down from 4.2% to 3.6% in January. Last year's VAT hike has dropped out of the annual rate calculation. That's been the factor this month. But there is a clear downtrend now coming through in inflation. It was at 5.2% just 4 months earlier. So the Bank of England seems to be on track with its view that inflation is going to head lower this year. We get an update on that from the Bank of England tomorrow when they publish their latest quarterly inflation projections. So that's the main news of the day. In terms of markets, it's currently coming up to 4 o'clock, so European markets are still trading. But they're down again. We're looking at the FTSE down about 0.3%, French market down 0.4%, and the German market down 0.3% today. The Italians, though, are up 0.25%. In the US, the Dow is down 0.3% at the moment at 12,838. So a bit of a negative sort of bias at the moment, but remember, European markets haven't yet closed, and of course the US has still got a ways to go. In commodity markets, copper prices are down 1.1% today. Gold's unchanged, $1,726 an ounce, and oil prices are up 0.5% at $101.4 and 40 cents a barrel. The Aussie dollar, it's at 1.0685 against the US dollar, so it's come off today in response to this increase in risk aversion, related to Moodys initially, and more recently related to the weaker data, the softer retail data in the US. That's about it from me. I'll be back again tomorrow.